Well, well, well. Tattooed Chef continues to circle the drain. So, the last time I made a video about this company, I believe it was my April Fool's special. No secret that I think that this is, and always has been, sort of hyped garbage, okay? At no point was $15, $20, $25 a share ever justified here, okay? And I think just now the market has finally just realized what a hot piece of trash this thing really is. So their delayed earnings finally got released, and we can see a clearer picture of just how bad things really are, okay? Net losses of 23 cents per share on a company that's trading for still only 61 cents per share at this point. I mean, that's pretty awful. Imagine if like Google put up a net loss of like 40 or 50 bucks per share. That's kind of it's ridiculous, right? So I just cannot even with this company right now. The big problem of why they are doing so badly, it comes down to their gross margins, okay? So as of late, their gross margins are actually negative, all right? Now, that means that every single dollar they add on revenue actually drives their net losses even higher. But you can see this wasn't always the case. They used to have positive margins, gross margins. Now, at one point in time, they had, 16%, one fluke near 30%, and some others in the 10, 11, 12, 13-ish percent range, okay? Which, for I guess like a food business isn't necessarily that far off of the mark, okay? But, and this is a rather big but, to be profitable at those levels, one, you need to be more consistently producing margins at those levels. Certainly something like a 2%, even a 6%, and definitely negative percents, you're not going to have a business for very long operating at those gross margin levels. I mean, the margins are already pretty thin in like the 10 or 12% range. But if you have sufficient scale and efficiency, you can, as a food company, produce a profit at those prices. So, like, take the exact opposite of Tattooed Chef, which is the meat company Tyson Foods, right? So you look at their gross margins, and you can see when they have gross margins of like 4%, well, they can't produce positive free cash flow or positive earnings off of that, okay? So there is a point at which, even with scale, positive gross margins can be too low to turn a profit. But as you can see, generally speaking, when they've got, something like a 7% or even a, well, that's about as low as it is where they've ever turned positive free cash flow and positive EPS. But you can see that more routinely they are in that 10, 11, 12, 13 range, and they do produce, generally speaking, solid free cash flow and solid earnings that are pretty consistent off of those levels of gross margin. Now, there are instances where, they do, even with, 10% plus gross margins, produce negative free cash flow, possibly due to capital expenditures and other things in those specific time frames. But all in all, you can see their gross margins are usually pretty consistently in that higher single digit to low double digits in the 10, 11, 12, 13% range. That seems to be what Tyson can usually do pretty consistently. All right. But Tattooed Chef ain't no Tyson Foods, okay? All right. Like Tyson Foods, we've got annual revenue in the $53 billion range, okay? That's what I mean by scale. Whereas Tattooed Chef, well, $230 million, okay? So, what's that? 1/200th the size. So, I guess you could say, yeah, if they were the size of Tyson Foods and they could be a little bit more consistent with their gross margins, sure, maybe they'd turn a profit. But damned if that's not a lot that they would have to achieve to go to 200x their revenue and get their gross margins from the negatives back up to like 12 or 13%. And frankly, I just don't see it happening, especially with the fact that like their revenue growth has screeched to basically a halt, all right? It's not looking good. All right, here's the quarterly revenue growth. I mean, hey, double digits quarter over quarter in the 20 to 30% range. That's pretty great. But then, negative. That's not good. Okay, and that's not a sign that they're going to achieve scale that they would need to be able to turn a profit off of modest gross margins. So, like, once again, I don't see how people really come to the point where they want to own a large portion of this company. Maybe they think it's going to be a short squeeze or something like that, but I don't see the value here. And I don't see the path to where they get to the point where they actually generate a return for shareholders. So if you're a Tattooed Chef bull, as they say, I implore you to rethink it, because to me it just looks like something that's circling a big old drain, all right? And I don't want to see anybody get hurt, all right, ladies and gentlemen. I want everybody that's in my audience, subscribe to my channel, to be winners with their portfolios. So if you have Tattooed Chef, or maybe if you previously had Tattooed Chef but saw this coming and got out, share your story in the comments. Tell people what it is that you think, what you saw. Do you agree with what I pointed out with regard to their gross margins and the fact that they're not even close to the scale they need to be to realistically turn a profit anytime in the near future? Also, hit that subscribe button. I want you to keep watching my videos and participating in the conversation on an ongoing basis, and you may also join the Discord. Link will be in the description. Take it easy, everyone, and have a fabulous day.